It's the biggest shake-up of the international tax system in decades that could see tax havens shut down, set a minimum international corporate tax rate, and ensure that global businesses pay more taxes. 130 countries signed on to a breakthrough blueprint outline of a deal earlier this month. All the G20 finance ministers meeting in Venice this weekend support the deal, including representatives from China, the US, and EU nations.
Many colleagues define it a historic agreement on a more stable and fairer international tax architecture. We endorsed the key components of the two pillars on the allocation of taxing rights on profits of multinational enterprises and the global minimum effective corporate taxes.
The deal would see a minimum international corporate tax rate of 15%. Another point would see huge companies like Google and Amazon pay taxes wherever their goods and services are sold, even if the corporations don't have physical presences in those countries. Various ministers hailed the proposed changes as a benefit for the world and individual countries.
This agreement ensures that our tax system is fit for the digital age and, crucially, that the right companies pay the right tax in the right places. Since that G7 meeting in London, now 130 other countries have also joined the proposals, and we now need to work on finalising the details before our October meetings so that we can indeed bring fairness to the global tax system and, crucially, ensure a good deal for British taxpayers.
Supporters say the deal meant to end the so-called race to the bottom by countries competing with each other to slash taxes in order to attract companies. It also aims to stop huge companies from holding their earnings in low-tax countries. A few countries refused to commit to the deal, saying it would remove their tools to attract investment and infringed on their sovereignty. It's been reported the opposition comes from 9 countries in all, including Ireland, Hungary, Barbados, and Kenya. The new plan is a reversal of the model many countries have followed in recent decades, offering low taxes to attract companies and so encourage growth. Many of the countries are conscious of the need for more stable revenue sources, following a grim 18 months of the global pandemic that worldwide has cost trillions in public spending. Work on the critical details will continue with the expectation that national leaders will approve a final version in October at the G20 summit in Rome. Toby Muse reporting for CGTN, Washington.